What if the Great Depression, the darkest hour of modern capitalism, wasn't just a tragedy, but a rebirth? What if the very institutions blamed for causing it, the banks, actually needed it to survive? This is the story of how collapse became salvation, how ruin rebuilt power, and how America's financial system emerged from ashes, stronger, more centralized, and more enduring than before. A story not just of money, but of human ambition, fear, and the strange way destruction often becomes creation. The 1920s were a dream in motion: jazz, cars, and easy money. Banks opened on every corner, giving out loans like candy. Credit flowed freely, and everyone believed prosperity had no end. But beneath the music and the ticker tapes, a silent danger grew: too much borrowed hope. Banks had tied themselves to speculation, feeding a fire they could no longer control. The world looked rich, but it was standing on sand. America called it the New Era. Factories roared, cities glittered, and Wall Street became a temple of belief. But money was no longer made by producing goods. It was made by betting on them. Banks financed the illusion, selling the dream that everyone could be rich tomorrow. It worked, until the dream demanded payment. Because in finance, illusions are expensive. The system was fragile, but greed was stronger than fear. Banks loaned to speculators who bought stocks with borrowed dollars, creating a bubble too vast to comprehend. Behind closed doors, bankers reassured each other, "It can't fall, but it could." And when it did, the crash wasn't just a correction, it was a cleansing fire. On October 24th, 1929, the illusion shattered. Crowds gathered outside the New York Stock Exchange, watching fortunes vanish in hours. Inside, panic echoed through the marble halls as the ticker tape fell like snow. The crash didn't just destroy wealth, it destroyed faith. And for banks, that loss of trust was fatal, or perhaps necessary. Within months, over 600 banks failed. Savings vanished. Families lost homes. Small towns went silent. But underneath the despair, something deeper was happening. A purge. The weakest institutions, built on risky speculation, were being erased. In their fall, the blueprint for a stronger system was forming. One built not on freedom, but on control. Between 1929 and 1933, more than 9,000 banks collapsed. Each one's death concentrated wealth and deposits into fewer, larger hands. It was brutal, yet it was order emerging from chaos. The small-town banker disappeared. The national institution was born. By the end, the survivors weren't just stronger, they were indispensable. The Great Depression forced banks to evolve or die. The big ones adapted, merging, consolidating, absorbing their rivals. They grew not despite the crisis, but because of it. In the ashes of collapse, they found clarity. Power thrives in scarcity. And the fewer the banks, the more power each would hold. Before the Depression, the Federal Reserve was weak, a timid referee in a wild game. But when the world collapsed, the Fed became savior, regulator, and master. It began injecting liquidity, setting rates, and shaping the destiny of the American economy. For the first time, money had a central heart, and every heartbeat would echo from the Fed's marble halls. While power consolidated, people suffered. Families stood in bread lines while bank vaults stayed locked. Children traded toys for food, and trust turned to dust. The Depression wasn't just an economic event, it was a human reckoning. Banks would survive, but humanity paid the bill. Then came Franklin D. Roosevelt, promising a New Deal. His reforms would rebuild the financial system, not through freedom, but through structure. Banks were no longer just lenders, they were extensions of policy. Money itself was reborn, government-guided, tightly managed, and less free than ever. But that was the price of survival. The Glass-Steagall Act of 1933 drew a line in history. Banks could either gamble or guard, not both. Commercial and investment banking were split apart, creating stability from disaster. The survivors accepted new rules because it meant survival. The Depression had taught them unchecked greed is a luxury only the dead can afford. In 1933, the US government seized private gold, replacing it with paper promises. For the first time, gold, the foundation of value, belonged to the state. People were forced to trade their metal for trust. It was controversial, but it saved the banks. With gold in federal hands, money could now expand infinitely, controlled, printed, and steered. With gold locked away, credit became the new king. Banks learned that debt could do what gold never could: grow without limit. Loans replaced savings, and paper replaced metal. A new empire was born, built not on weight, but on belief. The Depression had destroyed the old money and created something far more powerful. After years of loss, people were afraid to save, so banks reinvented trust, with insurance, guarantees, and new words like safe deposit. The fear of collapse became the foundation of stability. And the people who once cursed the banks now depended on them. It was the perfect irony. Fear turned to faith. By the late 1930s, America's financial architecture was complete. The Federal Reserve controlled the heartbeat, the FDIC ensured the blood, and banks became the veins of the economy. It was a living organism designed to never die. And the Great Depression had been its painful birth. The Depression taught bankers a brutal truth: growth without discipline ends in ruin. But it also taught governments a darker one: control ensures endurance. What perished in 1929 was freedom. What rose after was order. The cost was enormous, but so was the prize: immortality of the banking system. The Great Depression was both punishment and purification. It stripped away chaos and replaced it with command. It destroyed lives, yes, but it also saved the system from itself. That's the paradox history rarely admits. Sometimes collapse is not the end. It's the reset button of civilization. Money is not moral. It doesn't feel guilt or mercy. It simply adapts, flowing to where power survives. The Depression didn't destroy money, it refined it. And the banks, reborn from ruin, learned to speak its new language: control, confidence, and continuity. Look closely at modern crises, 2008, 2020, and you'll see the same cycle replaying: too much risk, sudden collapse, then consolidation and rebirth. The Great Depression didn't end the game, it taught the rules. Every crisis since has been a quiet echo of 1929. The Depression's legacy is invisible but lasting. Every time we borrow, every time the Fed intervenes, every bailout, we're paying for that old transformation. We inherited a system built from necessity, not choice. A system that must sometimes break to stay alive. And so, the Great Depression, the disaster that nearly ended America, became the forge that made modern banking indestructible. It was more than an economic event. It was a metamorphosis of power. Because in the story of money, endings are never final. They're just transformations waiting to happen. Perhaps the Great Depression didn't destroy the banks. It ensured they would never die.